Good morning, everyone, and welcome to our webinar brought to you by Bursa Malaysia and hosted by LifeChamp. My name is May, and I will be your moderator for this session titled Decode the Market, Fundamentals, Charts, and Smart Screening for Beginners. Now, do you ever feel overwhelmed by the stock markets? You hear terms like fundamentals, candlestick patterns, or screening tools, and it sounds confusing. Well, you're not alone. Every beginner feels sick. The good news is it doesn't have to be complicated. With the right guidance, you can learn how to understand the market step by step, even as a beginner. So today we are honored to have Mr. Johnny Tiong to guide you the step-by-step on understanding key fundamentals, interpreting charts using smart screening tools, and building a beginner-friendly investment portfolio with confidence. Now, before we begin, I would like to make a very short disclaimer, but a very important one, which is that to remind all of you that everything shared in this session is mainly for educational purposes only. And we are in no way providing you any advices or recommendations to buy or sell any security. So you are 100% liable if you make any investment decision. All right, moving on, let's introduce our guest speaker for today. He is an engineer by training and an investor by passion with over 10 years of investing experience. He combines fundamental analysis, technical analysis, and his own wind rider approach, riding opportunities as market conditions change. He has hosted stock investment sharing sessions and investment courses across Malaysia, and has also been invited as a panelist for various investment forums. Besides this, he is also the owner of the Gain Investor Facebook page and the blog Wind Rider Gain Investor, where he shares practical insights with the investing community. With that said, let's give a warm welcome to Mr. Johnny Tiong. Hi, Mr. Johnny. How are you
Hi,
doing?
morning, May. Thanks for the introduction. Thanks
Sure,
for the
I'll pass it
humble
to you.
introduction. Yep. Thanks. So I'll be sharing my screen now. Okay, just checking with everyone. Can you see my screen? There should be no problem seeing my
Yes,
screen, right?
it's
Yep.
clear.
Okay, that's good. So while we're on this page, while I'm sharing, so if you have any queries or any questions, please feel free to chat. And from time to time, I'll be focusing at the screen also. Okay, so yep, first of all, Happy New Year 2026. It's been 1 year since we haven't met each other. I mean, my last webinar with LifeChamp and Busa, I think it's last year. Okay, so Happy New Year. Hope everyone started this year with a very bullish sentiment with our PMX doing a lot of initiative and a lot of good works that he have done. So hopefully it will slowly bring up our Malaysian economy. Okay, so today I'll talk about as for beginners, which including me myself is also considered as a beginner because if we have a beginner knowledge with a beginner's mindset, we will tend to learn everything. Whatever we have learned before, we learn and we relearn. Okay, learn, unlearn, and we relearn. So today I'm gonna talk about some tactics or some strategies that we can use as a beginner. So I'm going to go through this is our learning outcomes for today. So go through the introduction. Core fundamental indicators. There's a lot of fundamental analysis. So I'll just talk about a few core fundamental indicators for the session. Okay. And we have core technical indicators. And we have the most important is we're going to go through the stock screening tools that is available in the market now. And we're going to go through the result analysis. And the last is we're going to we're gonna go through the Busa's tool, ETS Equity Trading Simulator for those who haven't tried trading yet. So ETS Equity Trading Simulator is a very good tool for everyone. Okay, so first introduction. So in Malaysia, there are more than 1,000 stocks in KLCI, in our stock exchange. So how do we actually choose a good stock? So whenever it comes to a selection, it always reminds me of this it's like a matchmaking TV reality show which is aired in China. So I always think about this. So if you can see this picture, imagine this is the, let's say this is a matchmaking, and then this is the guy who is going to choose his or her fate out of these 24 people. So how does this person actually choose his only one or her only one? So there are series of interview, series of conversation, and then there's also videos, VCRs. So for these people to see and whether, and the thing is, if he likes the person, let's say number 10, he likes number 10, and whether number 10 likes him or likes her is another case. So it's actually in stock market, it's the same thing. There's a lot of stocks, 1,000 stocks. So we need to choose which one is actually the best. Okay, maybe it's the best, not for us, it's the best for other people. But then how do we choose the best stock? Which is the best tradable stock for us? Okay, so that's what today I'm going to go through with everyone. So actually stock investment, okay, there's some saying, like for example, for my friends, they always like, they pick stock, stock picks is just like they go to the most active counter and then they just choose one of it. And then some people just actually do the selection very simple. Okay, some just flip the coin, and for example, some are driving in the market today. Oh, I see Sangwei. Okay, I go back and I buy Sangwei. Okay, so actually for some of the investors, it's just like a property investing. Because when we want to invest in a property, when we want to buy into a certain property, we do a lot of homework. Where's the location? How much is the price? If I buy it, if I rent out to other people, how much will be the rental yield? And who is the developer? Is it a very well-known developer? And how is the workmanship for the previous project? And is there any future nearby development? Is there any MRT, LRT, public transport nearby? So this is the difference between serious investors and also investors that just like play around. Okay, so I do understand that stock market, when we are investing in stock, we can just come down, we can just invest like a small amount, for example 1,000, 2,000. So when we invest into properties, we're investing a few thousands. So that's why when we invest in few thousand and just 1,000, the mindset should be the same. Okay, it should be the same. Okay, so okay. And before I go into furthermore, the hardest question of the year when we are doing selection is normally this kind of question. Okay, what do you want to have for lunch later? I think a lot of people definitely struggling. For sometimes for me, when it's lunchtime or dinner time, so what do we want to have for lunch? I often ask my wife, what do we want to have for dinner? What do we want to have for lunch? So I think this question is the hardest question of the year. Okay. So in today's rapidly evolving landscape, we can leverage on our automated systems to streamline stock selection. Now we do have a lot of AI tools in the website. You have ChatGPT, Copilot, Gemini. So there's a lot. So how do we actually utilize all these tools? Okay. So I just share, this is what I normally do. What I do is, for example, this is a cup of dirty water. Okay. So what I do is I'll set up my own filtration system, and then I'll screen out and I have a clean glass of water. So when I have this clean glass of water, it's up to me when do I want to drink the water. So this analogy is just like this glass of water, dirty water, is KLCI. Okay, our stocks, the more than 1,000 stocks. Okay, there are 1,000 stocks. And then I use my filtration system, which in this webinar, I'm going to share about what are the tools that I use, what are the indicators that I use to screen out the counters. And then I have the list of my favorite stocks in this cup of water. So when I feel like it, say I will drink the water whenever, because it's safe. I already filtered. So it's safe for me to drink. So it's just, when do I want to drink? When do I want to, in stocks term is, when do I want to buy? How much I want to buy. Okay. So the reason on why do I do this? Why do I have this screening? It's basically it saves time and effortlessly identify my ideal stock picks because my filtration is based on what I think is suitable for me. Okay, so I have those criteria. Then I screen for target stocks using rigorous custom criteria. So 1,000 stocks in Malaysia, I do not have time to go through one by one. So I need to use the screener which is available to screen out the counters. Okay, so I have a lot of more time, free up my time to do some in-depth research before making final investment decisions. So if let's say I only have 10 counters, okay, in after my screening, so I just need to focus my time and energy for these 10 stocks. The rest of the 1,000 stocks is not in my screener list. I will not look at it. Okay, so this is the reason why I do this actually. So, and another question people often ask me, where do I get my investing ideas? Where do I get ideas to invest? So the most the most general one is through reading newspapers, reading, there's a lot of posts now, okay? Reading news is definitely one of it. Second is from day-to-day life. For example, just like I just mentioned that I was driving to work and I saw Sunway, I saw Gamuda, okay? I go to the shopping market, I see X, I see LHI, I see Tiong. It's day-to-day life. Okay. The third is through the screener result, in which I'm gonna share with you what is a screener result and how do we do the screening with the tools that we have. Okay. So before we dive in furthermore, so let's just define our core criteria. So I will be talking about fundamental indicators and also technical indicators. There's a lot of fundamental analysis in the market. There's a lot. You can go through YouTube, you can go through your own platform, your investment platforms. There's a lot more than that. So only choose a few that you are comfortable and you fully understand. So in this case, today I go through three, which is the PE, price per earning ratio. Then second one is the debt to equity ratio, and third, the return of equity, in which these three fundamental indicators I'll be using in my screener later. So for my technical indicators, I'm going to use through the most general one, which is the moving average 20 and moving average 40. And then when these two lines, when they play around, we have a golden cross and also a death cross. So I'm going to share about technical indicators for my screener also. Okay. The reason we do this is we want to have the best fit stock for our portfolio. Okay. So, okay, let's just go through the core fundamental indicators. Yeah, Lisa, I'll go through in the slide later. Okay. Thanks for your chat. Okay, core fundamental indicators. Let us just go through the core fundamental indicators. Just now I shared about three: PE, debt to equity ratio, and also ROE. So this is just some readings for everyone. I'm gonna go through the examples later. So what is actually PE ratio? If you look at the formula, it's basically share price, which is whatever we see in our platform now. The platform is like, for example, your RHB platform, your Affin platform, or your Maybank platform, or CIMB platform. Okay, so the share price is the share price of each counter. So earnings per share is normally will be translated, which is the net profit divided by your number of shares. So PE is how we get the number, share price divided by earning per share. So what is actually definition of PE? So it's actually a fundamental tool. We use it to determine whether a stock is overvalued or undervalued. Okay, whether a stock is overvalued or undervalued. So what does it tell? The valuation, what does it tell? So if it is a high PE, if it is high, meaning to say it's okay, relative, I just talk about a general number. High number means that it's potential overvaluation. Okay, which means that the price is significantly higher than its intrinsic value or its value. Okay, low PE is basically mentioned that it's a potential investment value. If we invest in low PE, the chances is we're gonna get better profit. Okay, so in PE, it basically translated into numbers. So what does numbers mean? It basically means the payback principle, which represents the number of years required to gain back your investment. Okay, so a lower number generally indicates a faster return. For example, I have a PE of 5 and 10. In general, when it's translated to a layman term, 5 means that you need 5 years to gain back your return. That whatever capital you put in, 5 years, you get all your money 100% back. If PE is 10, it means that after 10 years, you get back your capital. So in this case, do we like PE 5 or PE 10? Definitely you want PE 5 because in only 5 years time, we can get back our return. Okay, so this is normally what PE means. Okay, so how do we evaluate? So there are two ways that we can use to evaluate. One is we use historical benchmarking, in which we compare this counter against 5 years historical average. Okay, so all these numbers are available in your platform. If you are using, regardless what platform you are using, your Moomoo ke, your TradingView ke, your Webull ke, all are inside. You just need to explore your tools. Okay, so sector comparison, you evaluate the PE against your industry peers or sector averages. Okay, there are a few sectors in Malaysia, so you just need to refer to who are the market leaders in that specific sector. So for example, we look at this. I look into banking sectors. I take into three counters: Maybank, Public Bank, and also CIMB. So the current Maybank's PE is 12.5. So the average 5-year average is 12.3. So if you compare currently 12.5 and 5 years average of 12.3, so the status we can say it's fair value because it's just almost around that same price, okay, that same PE. So if we look at Public Bank, another banking sector, current PE is 10.6. Okay, so the 5 years average P is 14.7. So for the past 5 years, it's 14.7. And now currently is 10.6. So it normally we can translate it as is an undervalue as of now. Okay, and last one for the CIMB, current P is 11.4. Okay, 5 years average PE is 15.9. So if we compare to the 5 years average PE, it's considered as undervalued. So if we look at the whole sector, the whole banking sector, we can say the rough PE is around like 13. If you just plus all these number divide by 3, so it's like around 12 to 13. So we can say that Public Bank and CIMB Bank is currently undervalued. Okay, these, again to repeat, these are examples, not to say, oh, Public Bank, CIMB Bank, let's go and buy now. This is not the case. This is just an explanation of how do we use a P, and also we are comparing against 5 years historical data and also the whole industry. Okay, so for PE, we're done. So next, we're going to go in through debt to equity ratio, which the formula is the total debt, long-term debt, short-term debt, is a summation of long-term debt and short-term debt divided by the equity. Okay, so equity is available in the balance sheet. Okay, so what's the definition of the debt to equity ratio? So it's basically is a financial health indicator, whether the company is good, is healthy or not. Okay, so it measures the proportion of a company's total debt to its shareholders' equity. So in short, it tells you that how much the company is leveraging borrowed money to grow. Okay, how are the company leveraging the money to grow their own business? Okay, so in terms of valuation, if debt to equity ratio is lower than 0.8, which I think a lot of people and a lot of industry is using this benchmark, if it is lower than 0.8, it indicates a conservative company. So it relies mostly on its own fund and has a low risk of bankruptcy during a recession. So you can see why debt to equity ratio is an important indicator for the time being. Because if there's any risk of recession, so those companies who have a lot of debt will be at risk. So we prefer companies with low debt. So if the debt to equity ratio is more than 1.2, so it indicates that a highly leveraged company, which they have a lot of debt. So when we have a lot of debt, we need to pay a lot of interest, and they're higher risk if the economy slows down. Okay, so how do we actually evaluate debt to equity ratio? So we can use interest rate sensitivity, or in which, just remember, we want zero debt or net debt or net cash company. So if we want to look for companies, good companies, normally they have debt to equity ratio which is lower than 0.8, or the best will be 0. Okay, so meaning to say they are net cash and they are extremely safe. But in my opinion, some companies need to have some debt. For example, sometimes you need to have good relationship with the banks. So you can borrow some money from the bank, okay, just to maintain the relationship. Okay, so debt to equity ratio. So now I'm using this technology counter. I'm looking into Inari, DNO, NationGate, and also GradTech. So the debt to equity ratio for Inari is 0. Okay, they are the leader of the industry for the technology industry. So no, they are often being benchmarked against the other technology counters. And for DNO and NationGate, the debt to equity ratio is 0.55 and 0.51. So I know, even though it's below 0.8, so because just now I mentioned that it's below 0.8, so it should be okay, conservative, right? But for this technology industry, even though it's below 0.8, but then in the technology industry, it's considered fairly high. If you look across all those good companies, okay, technology counters, normally that should be around 0.4, 0.5. Okay, so if we look at GradTech, 0.04 debt to equity ratio, which is considered healthy. Okay, so debt to equity ratio is different across different industry, but in general for our screening, let's just put at 0.8. Okay, so normally for banking, airline, or large manufacturing companies, they have a higher debt to equity ratio. So due to the banks, the modus operandi, or how they operate, how the business model, and also large manufacturing companies, they invest a lot in machineries to produce goods. So some of the manufacturing companies do not have much cash, some have a lot of cash, but commonly, generally, they will be borrowing money from the banks to buy a lot of machines. Okay, so their debt is quite high. The debt is normally higher. Okay, so it depends on the industry. So we can safely say that 0.8. Okay, that's our benchmark. So after this, we talk about a return of equity. Return of equity, which is our last fundamental and indicators. So ROE is translated to net income divided by equity. Okay, so what does ROE means? It measures how much a company generates for every $1 or 1 ringgit of shareholders' equity. So it basically layman term, it translate at they borrow money, they have your money. So how they gonna translate your 1 ringgit? How much value added? You invest 1 ringgit in them, in the company, how they translate your 1 ringgit to the return, how they translate your 1 ringgit to the profit and give you as a return. Okay, so how we evaluate higher ROE means that it's a money making machine or money making company. So the company is very effective at turning investors' capital to profit. You invest this company 1 ringgit, it return to you 3 times. That's a company that we want. Okay, so how do we normally evaluate the ROE? So internal benchmark is we can compare the ROE to the company's cost of equity, which is also available in our platform, cost of equity. So if ROE is higher, then the company is creating value to its shareholders. Or peer comparison, which I'm doing on the table down there. We're looking at the utilities sector, and then we can compare the ROE between the counters that we have. So a company with a 15% ROE is superior if compared to a 10% of ROE, if the risks are similar. So in this utilities sector, we look at this Gas Malaysia, 31% ROE, which is above 15%, meaning to say the investors are investing 1 ringgit and they can return a lot of return to the investors. YTL Power, 12%, Tenaga 7%, and Malakoff, which is 3%. Okay, so the higher ROE, those are the ones that we like. So again, in conclusion, how to select the winner? We want stocks with low PE. We want stocks with low debt to equity ratio, and we want stocks with high ROE. Okay, low PE, low debt equity ratio, and high ROE. Just remember this because we're gonna use this in our screener later. Definitely in your fundamentals, you can add in a lot of your own fundamentals. Price to book value, net cash. There's a lot in the market. But for the sake of this webinar, in which I'm also practicing. Normally, I just use these three indicators for my own screening. Okay. So core technical indicators, I think this getting interesting a bit for those chartists and technical analysis. So the one I'm going to use is moving average. So what are moving average, or how it can be used? It can be used to confirm on the trends, whether it's an uptrend, downtrend, or the sideway, and also used for traders to perform action. Action here means when you buy and when you sell. So moving average is actually drawn by calculating a group of numbers together and then subsequently combined together to form a line. So let us just look at this table. For example, we have day 1 until day 10. So the closing price for each day 1, day 2, day 3, day 4, day 5. So if I'm going to do a moving average line of 7, the right table here, moving average of 7. So why there's no average here is because we need to achieve 7 days, then only we have the average of 7. So we have this. You see day 1 to day 7. So the closing price of each day, how do I get the average? Average will be all this number added up, sum up, divided by 7, which is 5.83. And then the next day will be 5.91, which is 5.64. Sum up 5.92, sum up all the numbers until 6.15 divided by 7. So this is how I calculate, or how I do the moving average line. Okay? So it's basically telling us in the past 7 days, and we reflect in the future. Okay, if for the past 7 days, if you look at the number are increasing, 61, 64, 92, 8578, drop a bit, but it still go up 5.99, 6.03. So if we look at the average, it is telling us that it's slowly gaining momentum to go up. The moving average is telling us it's going up. Uptrend is coming. Okay. So moving average. So normally we can use moving average 20 and moving average 40 to operate on mid-term stocks, which translate to around 2 months. My definition of mid-term stock is like 1 to 2 months. Okay. So you must be asking me, why moving average 20? Why 40? What does it mean? Is this numbers 20 is my favorite number or plucked from sky? So in logic, 20 here means it's a trading days in every month. Okay, there are 31 days in a month. You minus off your weekend, Saturday, Sunday. So each month is around like 20 days of trading days. 40 is 2 months. Okay, so here is my logic. 20 is for 1 month. 40 is for 2 months. Okay, so in order for us to operate on this moving average, there are 2 conditions that we need to fulfill. So for the uptrend stocks, for us to take action, for us to buy, so first is we need to have a MA, moving average 20 crosses over 40 to form a golden cross. 20 crossover 40, so we have a golden cross. I label it as a golden cross. So and the second condition is the candles are all above are all above the both moving average. Means that the stock is in an uptrend for the midterm. Midterm here means for 2 months. Okay. So for downtrend, so if MA 40 crosses over 20 to form a death cross. 40 cross over 20. Later I'll show example. Okay. So the candles are below both moving average. The candles are below the 2 lines, MA 40 and MA 20. Meaning to say the stocks are in the downtrend in the midterm. Okay, remember this and I'm going to show example. So okay, I get you. So I'll use an analogy. You must be thinking, what lah, MA 20, MA 40, what that crossover, crossover, what candle below? Confused. Okay, let me get you an analogy. So I have a 20 kilogram, 20 kg skinny guy and a 40 kg skinny guy. 40 kg skinny guy going up the stairs. So I just use an analogy for easier to understand. So 20 and 40. 20 skinny, 20 is the one with the fat belly, okay? So for example, case 1, we have 20 kg skinny guy carries 40 kg fatty up the stairs. Can you imagine if a 20 kg carry up double his size going up the stairs? Oh, he must be sweating all over and he might have his arm broken. Too heavy ma. Need to carry 40 kg. How can it happen? Okay, it can happen, but it will be very, very tiring for him. Okay, so next, if we have a case of 40 kg fatty carries 20 kg skinny up the stairs. How does it look like? 40 kg, carry 20 kg. Definitely, hey, no problem. He can do it. It's half of his size. He can easily carry up the skinny guy up the stairs, right? Okay, so this is the same analogy. So just look at the examples. Okay, mindful of my stock. The counters that I share is not a buy sign, nor a buy signal, and I purposely use the counters which are years back. Is not reflecting the current. Okay, so if you want the current, you need to do your own homework, but then the analogy still works. No matter it's past or now, it still works 100%. Okay, so this is a sort of penta, a technology counter. So first or later I'll also show you how do we actually how do we summon out the moving average 20 and summon out moving average 40 in the example later. I'll using ETS, energy, equity trading simulation. So I'm using chart nexus. So when I call out 20 and 40, so you can see there's actually a crossover happening here. So remember I said when 20 crossover 40 is a golden cross, right? So remember two criteria I mentioned just now. When the crossover happens, we need to see if it is a MA20 golden cross MA40, then second criteria, if the candles are above moving average, the both lines, then the stock is in an uptrend. Okay, so you see from this point, around 2.1, it had been going uptrend because it fulfilled two conditions. One is MA20, golden cross MA40. My MA20 is blue line crossover red line. Okay, and then the candles are above these two lines, so it's an uptrend. Okay, get it? Second one, for example, I'm showing Asiata in 2018 also. So when you see there's a red crossover blue line, MA40 crossover MA20. So you see MA40 crossover MA20 is a death cross, and then the candles are below moving averages, meaning to say it's in a downtrend position. Downtrend, 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 until there is another crossover happening. Okay, so remember these two criteria, MA40, 20 and 40, how they cross over each other. In this case, MA40 death cross MA20, and then the candles, these are all the candles are below both lines, so they're in a downtrend position. Okay, so next, let's just look at AWC. This is a bit challenging, but bear with me, let's go through together. So we see the first crossover. Okay, we see the first crossover happening here, which is the MA40 cross over MA20, right? And then we see the candles below both moving averages, so it's in a downtrend position. See, it's going down, up a bit, then down. Overall, it's still in downtrend position. And then if you look at this point, there's another crossover happening. So MA20 actually golden cross MA40, but then the candles touch the MA lines. I would prefer that if there's a crossover happening, the candles need to be above both lines for at least 5 trading days. Because there's a possibility, 5 is just my benchmark. If it can stay above the lines for 5 days and above, meaning to say it's in a solid position. If let's say it's just test water, test a bit, after 3 or 4 days, it continued to fall down because it's still in a downtrend. We want it to be above the lines for at least 5 days. Then we can confirm there's a trend. Okay, so in this case, the MA, even though MA20 crossover MA40, but the candles touch the moving average line. So for me, it's still uncertain. We need to see a few further days and further confirm after a few days that is still downtrend. You will see from this day onwards is considered as day one. The candles are above the line. So we need to see another 5 days for me to confirm. Okay. So after this crossover, the candles fall below the line. So continue as a downtrend. Okay. Until here, there's an uptrend. There's a crossover, sorry, there's a crossover. Do you see? There's a crossover. So in this case, the MA20 golden cross MA40, However, the candles are not above the both moving average, right? It's not above the both moving average. So it is still downtrend. Meaning to say, this stock, AWC, from September, from August, it had been downtrend until 2018 March. And it's still downtrend until July. So meaning to say it had been downtrend for whole 1 year. Okay. And then until there's another crossover happening here, where we see MA20 golden cross MA40, and the candles are above both moving averages. So for me, if I want to buy, I wait until crossover happen, candles above moving average for at least 5 days, then I will take action. So most probably I'll be taking action 5 days, 1, 2, 3, 4, 5, maybe around 0.72. Get it? And then even though the stock falls below to 0.72, okay, there is no downtrend signal. There's no crossover. The candles are still above. So I will continue to hold. This is how I use the analogy of moving averages. Okay. So how do I operate? I'll just give a few examples. How do I operate? For example, this is a company, a palm oil industry, plantation, Ta An. Example, if I bought in this here, there's a crossover. After 5 days of confirmation, I buy. Golden cross was formed, candles above both moving average. Imagine I bought in at 2.5 around this place, 2.5. Then I continue to hold until here because there's no signal, there's no reason for me to sell. Okay? If the reason I buy is strictly following the technical analysis, then that would be the reason if I sell. If there is a death cross or it's a downtrend, it is changed to downtrend. So I saw a crossover here, so I will take profit or I'll cut loss. So I saw a death cross. So the candles are below. You see, the candles are below both moving averages. So imagine if I sell at around 5, because I always say I wait for 5 days. It depends. Not to say must die or 5 days still downtrend. Okay. Then I sell it after the 5 days. Because who says so? Johnny says so, 5 days, No, it's up to you. If you saw a death cross and you feel like, I already earned like 100%. For example, when there's a death cross happening here, I already earned 100%. Takkan I want to wait for another 5 days. I can just take profit. Let the profit enter my pocket. I can buy something good food to eat. Buy something for my wife. Buy something for my children. Why not? Take profit is never wrong, okay? Take profit is never wrong. Don't, even though it's 5%, 10%, 100%, it's never wrong. As long as you have money in your pocket, you can spend, you can give it to others, it's never wrong, okay? Next, we look at IFCA, okay? For example, there's a crossover happening, okay? And then, golden cross, candles above both moving average, and I bought at 0.35. Imagine, assume. And then you see, there's no crossover yet. So I will continue to hold, and then the profit still continuing at 111%. Okay. Next, DNO. I think I might need to cut short my examples because there's still some slide for me to go. So May, if I take a bit of time to the Q&A, is it okay?
Yes, that's fine.
Okay, then slowly getting too excited. Okay, for example, for this DNO, assume we bought at around, okay, now we saw a golden cross, a crossover, and we saw candles are above both moving averages. Assume we bought at 0.32, maybe just here, 5 days around here. Okay, so I continue to hold. Then I saw a crossover. Do you see a crossover happening here? But then, well, even though it's a death cross, but then the candles are yet to fall below. See, even though there's a death cross, 1, 2, 3, still can go up, right? Still the candles haven't fall below two lines. So for me, I'll continue to hold, I'll maintain my position. And then I will eventually have some action when there's a crossover and around like 5 days. Right. Okay. So when the candles fall below both moving averages, I will sell at around 56 cents. So you can see, it's actually, for me, if I use this tactic, I will respect the tactic. The reason I buy is the reason I sell. Even though you can say, hey, maybe I can sell here, I can sell there. But again, take profit is never wrong. Take profit at your own suitable price. Okay? For me, for example purpose, buy here, take crossover happen, 5 days below the moving average, time for me to jabut, time for me to go. So profit at 75%. Not bad, right? Okay. In just like 2, 3, 4, 5, 6, 7, 8, 7 months, half year, I get 75%. Okay. So next, if there's another crossover happening here, 5 days, then imagine crossover, candles above, I bought at 0.65 around here, around this price. Okay. Then crossover happening here, candles below both. Okay, I sell at 60 cents. I lost 8%. I'm not saying that when you use this moving average tactic, you can get profit every time. No. Sometimes you earn, sometimes you lose. Remember, stock market is a zero-sum game. When you earn money, you're earning from someone else. And when we lost money, we actually lost to some of the investors also. So take it with a pinch of salt and just be humble, be steady. It's okay. I earn money because I earn from people who cut loss, or people who cut loss. I earn from someone else. So when I lost, I return back to them. That's the mindset that I have. Okay. So here, so I saw another crossover, another opportunity coming in. So crossover, candles above both moving average. I'm buying at around 0.68, and my profit still runs at 35%. You see, if you see this stock, if you see this DNO, you see the volume is very, very high. So meaning to say there's a high volume coming in at September 2018. So for me, most probably I'll continue to hold because there's a lot of volume interest coming in to buy the stock. So it still continues at 35%. So that's good, right? So I think this is my last example, Top Glove. For those who are familiar with Top Glove, last few years, okay, imagine crossover, candles above moving average. I bought in at 1.2. Okay, I bought in at 1.2, 1 ringgit 20 cent. I hold until there's a crossover. You see, there's a sudden drop. Crossover 5 days, I might be selling at the lowest point. Okay, let's say I sell it around like, I think it should be around 5.4, good, 5.2. Okay, assume 5.2. Then I profit at 333% for like 8 to 9 months. It's because of COVID, right? If you remember that time. Okay. So I saw another golden cross. And then the candles are above both moving average. So I bought in at 8 ringgit. After 5 days, kan, confirmation, I bought 8 ringgit. Oh, berani, huh? So daring. 8 ringgit I buy. Oh, suddenly I saw a crossover here. 5 days. Why only cut at 6.8? Why not cut here directly? 5 days. Who say so? Johnny say. Okay, again, cut loss at your own comfortable number. If you saw a death cross, if you feel like you don't want to wait, you can cut loss, up to you. Or take profit, up to you. Okay. So, okay, assume death cross happen, candles below 5, both moving average, sell at 6.8, I lost at 15%. Okay. So actually, if you ever saw a death cross, it's a downtrend. So do not ever trade a downtrend stock. Don't ever buy a downtrend and you hope that this must be the bottom already. So I hope for it to rebound. I hope you thought it's a bottom, but there's always a bottomless bottom. Just like you order drinks, bottomless Coke, bottomless Sprite. So for this stock, it can go bottomless. So don't think that it's the bottom. If the market didn't say it's a bottom, then it's not a bottom. And then we don't self-proclaim it's a bottom because it's always a bottomless bottom. Okay? And my reminder to all is do not ever trade a downtrend stock. It's dangerous. Okay? So, okay, we're gonna share about stock screening tools. Okay, I have two methods. In the okay, we have limited of time, so I'm gonna share about trading views method. So, okay, first method we can use KLSE screener. This is the website. I think you guys can go Google KLSE screener. So, in terms of technical, you can use the chart that you have. Because for KLSE screener, it can actually screen fundamental and technical, but then I think it's better used at KLSE screen the fundamental for KLSE screener, and then technical you can refer to the chart. So whatever screening result that we have in the KLSE screener, you can go to your chart nexus or your platform charting software to see the chart one by one. Okay, so advantages is easy to use. Okay, so this is the link. So the second method for TradingView itself is a quite advanced, is a quite useful platform whereby I can screen through my fundamental and screen through my technical. Okay, so the advantage is both of fundamental and technical in one platform. So I prefer TradingView. I think a lot of outside investors still do not know how to use TradingView. So I'm going to share this and then just some snippets and some snapshots for KLSE screener. So this is normally, because just I will mention, if PE we want below 25, ROE we want minimum of 15, 50 and above. PE maximum is 25, 26, 27 we don't want. Okay, ROE minimum 15, we want 15 and above. So debt to equity ratio, the lower the better. So we want a maximum of 0.8. So this is my screening that I've done a few days ago. So it screened out this number. Okay, but then for Malaysian stocks, normally I will look at counters above 1 ringgit. Okay, because lower than 1 ringgit, there's a potential that people can goreng. Okay, so after I screen out, they give me the list. I will I will go through the list one by one in the charting software, and I will only focus at stocks priced above 1 ringgit, and I will do what we do just now. If there's a crossover, the candles are above both lines, then I might consider to take in my position. Okay, so the stock screening tool, TradingView. So I'm gonna demo on my platform here. Uh, uh, Wait a minute. I have it open here. Okay, for those who do not have TradingView, please go and have an account in TradingView. It is very useful. But if ever you want to purchase, but don't purchase first, the price is a bit mahal, it's a bit expensive. So try to get used to the software first. Now, okay, I subscribed to it during the Black Friday, so the price is quite cheap lah at that moment. So I know that for TradingView, free account, you can put 2 or 3 indicators max. Then the rest you need to pay. But for this case, I think 2 is enough already for our case. Okay, so first I'm gonna show how do we actually set up the moving average in TradingView. Okay, and next we're gonna go through the how do you call this the screener. Okay, so this is your TradingView. Okay, so for example, I start from beginning. Let's say you go for TradingView, so you will have, no matter how is the interface or how is the appearance, you just, for example, you type a counter. Sorry, my connection is a bit slow now. For example, you type Busa. So the good thing about TradingView is you have lots on lots of stocks or funds or futures, forex across the whole world. It's a global trading tool. So for example, I saw Busa and I just click in. I can launch chart, then it will bring me to another page. Okay, so assume now I have this chart. Okay, so what do I need to do? How do I want to add in the indicators? So step by step, there's a recording after this, you can also look at it, but now we concentrate first. You go to indicators. Okay, now we want to add in the moving average. So we can type in moving average. Okay, simple moving average. Okay, we just click. You remember I want two lines, right? Moving average 20 and moving average 40. Can. But then in this case, in trading view, there's a thing called MA cross, if you can see. Moving average cross. So for those who do not subscribe and you have limited indicator, because free version is only you can input two. Okay, so you can just put one MA cross. And the most important, when we do technical analysis, we need to compare together with volume, put together with volume. Okay, so I just put a cross. Okay, SMN, this one I just close it down. So there are two indicators, right? So in my MA cross, there's a setting here. There's a bolts and nuts here. I click on the settings. Then my short moving average is 20. Remember we talked about 20, 40, Y20, Y40. If you forget, you need to refer back to the recording. Okay. Then 2040, I go to the style. So remember, I like blue, so I put blue as a Chelsea fan. Okay. And then lawn is a MA40 for the red. Okay. For the red. So when there is a cross, okay, I want it to be green, for example. So they will show me something like this. Okay. The rest of it, we don't need to, care. Yes, those are mostly on the daily frame. Yes. All the simple moving average best work in daily chart. Not hourly chart, not minute chart, not weekly chart, daily chart for our MA cross, okay, for the crossover. So I just click OK. Okay, so you can see here when the crossover happen, when there's a crossover happen, when blue crossover red, 20 crossover 40, wait for 5 days to confirm uptrend. You see, it's continue to uptrend until this moment, even though there's a crossover happening here, the red crossover 20, but then the candles are still above. The candles haven't fall below the line, so it's still an uptrend stock. Okay, this is how we set up in our trading view. Next, I'm going to talk about how do we bring out the screener. Okay, so in your trading view, okay, but before that, good thing we can save. You see, there's a button here, manage layout. There's a small save button. Okay, you can click save. So whatever you have designed, you have charted through, you can save this layout. Okay. Okay, so now we talk about screening. You see there's an arrow, there's a, for you to, the dot, I don't know how you call that, the screener here, you just click on the screener. Okay, so you just need to bring this over a bit. Okay, I actually preset in my 2026, but then I think I'll just go through together with the slide that we have. So just now, these are the fundamentals that we go through. We have PE, so I'm gonna add filter PE. PE is a valuation. So price per earning ratio. If not, you can just type it up. Price per earning ratio. Price per earning ratio doesn't appear. P per price earning. Okay. I don't know where is it. It's okay. But we go to valuation, price to earning ratio. Sorry, price to earning ratio. Okay. We add in first. Second one, we go to the ROE, return of equity. So it's margins and ratios. Return of equity. Return on equity. Correct. Trailing, there's a selection annual trailing 12 months. So we want it to be trailing 12 months, meaning to say we want to take from the quarterly result, not only on the annual report. Okay. Quarterly result, add filter. Next, I add in what we learned just now. Debt to equity ratio, right? Which is inside, I think here, margin and ratio, debt to equity ratio. Yes. So I look at it quarterly or annually. I want it to be sensitive. So it will read out, generate the data from the quarterly value. Okay. Add value. Okay. So I have all this thing in. Wait a moment. Okay. Yes. And then, so once I have all of this, I'm gonna call this thing out. PE, I want it to be less than 25, right? I just key in 25. So you can see just now from the stock, just now, it already start to screen. It screen from 551. ROE, I want it to be, I manual setup, trailing 12 months, above a value of 15%, right? So from just now 551 to 122. Okay, debt to equity ratio, I want it to be manual setup, quarterly, I want it to be below 0.8. Okay, you see it already start to screen out. The numbers from tadi, from just now 500 something is already going down to 101. Okay, actually I add in net income of more than 1 ringgit is I want the company to make profit, but I think it doesn't matter. Okay, if want to add in also can. I just go to plus, I go to financials, I go to net income. I want it to be a quarterly, trailing 12 month also can. I want it to more than manual setup more than 1 ringgit. It's just to indicate that the company is making profit in the latest quarter. I do not want to screen out the companies. Let's say 5 years make profit. Suddenly there's 1 quarter doesn't make profit. Even if 1 quarter it make loss, I also do not want. Okay, I also do not want. So these are my fundamental screening. So now I'm going to add in my technical screening. Okay, remember the 2 criteria. Okay, crossover, and then also the candles above. So how do we set that up in TradingView? So next you go to add new filter. So if you see here with security info, market data, technicals, financials, just now we are screening on fundamentals. We are taking data from financials, valuation, and margins and ratios. For those, if you have more free time, you can go and explore one by one. What does it mean? They even have screening for dividends. Okay, so now we concentrate back. We want to say our moving average. Okay, so I'm going to go to technicals, and I want to look at moving average. Where is it? Simple moving average. Okay, simple moving average. I have 20 and 40. 20 1 day, correct, is daily. Okay, so remember just now I said I want to crossover of 40 crossover to 40, 20 crossover to 40. So how I do it is I need to go to here. You can see the price here. You can see there's a lot of selection here. So I go to manual setup. When 20 is above, I do not want above or equal. I only want when 20 above 40 above. Value here, I need to change to moving average. Another simple moving average of 40 days. You get it? So if you're confused, if you are ever confused when you're using the screener, you mouse over and can read simple moving average 20 above simple moving average 40. Is that what we want? Yes. Nobody talk to me, so I talk to myself. Yes. Okay. So the next criteria. So you can see slowly it's already changed the symbol to 48 counters now. It's already helping us to screen out. Okay. So next, the last one, we want the price to be above both moving average, right? Okay. So now for this price, we go to market data. We want the price. Price is in the market data. Okay. So the price is above moving average of simple moving average of 20. Correct? So see from 50 already now screen down to 33. So since just now we mentioned that the price to be above, sorry, it should be above, not above and equal. I want it to be 100% above. Okay. So next I'm gonna add in price above again, above the 40 moving average. Price add in manual setup above moving average of 40. Okay, so you see from this screening already come out to 33 counters. So when you have all this, remember to save. Okay, this is our screening criteria. So if you let's say we have a look, we click get it one by one. I just pull aside of this, my screening, I make it small. You see, Dutch lady, golden cross. And it basically fulfill all the criteria that we set up. So Petronas Dagangan, golden cross. Okay, golden cross happened already. Okay, but then we still need to monitor 5 days. Okay, golden cross already happening. Carlsberg, LPI, Gas Malaysia. Okay, feel free to explore what I have just shared. Okay, I think everything I shared is quite significant. Okay, so these are the screening tool for our trading view. Okay, remember just now we talk about PE, ROE, debt to equity ratio. Technical screening, we talk about golden cross, and we talk about the price need to be above both average, moving average, in which is translated to this screening. So you can name your screening whatever you like. Best screener, tip top screener, up to you. For me, I just save it as a 2026. Okay. Okay, next, going back to our slide. So this will be the outcome from the trading view that you have, all the indicators that you show, and then also in the technical, you want to call out moving average, 2040, and also MA cross, and also the volume. Okay, it's shown here. Okay, combining fundamental and technical in trading view. So lastly, we're gonna go through equity trading simulator. So first of all, for those who haven't registered My Bursa, before this is called Bursa Academy, they have a lot of enhancement, a lot of effort put in this My Bursa. It's very useful tool, very, very useful tool. No matter you're equity trader, futures trader, go and register an account, have a look. You will be amazed. You will be amazed, to be honest. They even have tools for you. They have programs for you. They have events for you. So have a look, have a look. Okay? So, okay, now I'm gonna calling my, okay, this is, okay, let me just cross it. So if you register an account, so how do you, for those who haven't traded or haven't really have a platform, you can use this tool, equity simulator. You can go and have a look. They give you money, a virtual money of 100K. So you can imagine you are trading. Okay, you are using the platform. So in order for you to get familiar with the platform, okay? So while it's loading, so I'll go through my slide. So you have a few things here. You have your quote screen, you have your analysis chart, you have your stock info tracker. So basically it doesn't go much difference. It's more or less like this. So you can see the control panel. I call it control panel up here. Okay, so I have the highlight of the day. So in today, I mean, in this example, the Bursa is going up 1.04% or 16.38 points. And then how many counters been traded, how many red, how many unchanged. Okay, and I have windows. I have 3 windows. Window 1, another window here which shows analysis chart, and another window here showing a stock info or tracker. Okay. Wait for a minute. I'm still loading on my trading platform, trading portal. Okay. So these are all called windows. And you have a few tabs here. You can have a lot of tabs. I've called screen. I can even bring in the analysis chart to this tab. Stock tracker into this tab also. I can do that as well. Okay. Okay. So today in my Bursa Equity Trading Simulator, I think with the interest of time, I will show how do we actually, sorry, go to market, mouse over market, I have tools, go to the right, equity simulator. I'll show how do we call out the analysis chart. Okay, here it comes. Okay, so like normal platform, you have all this, and then buy, sell, news, analysis, and market and order book. So for example, now, okay, let's see, I look at a counter called MSC, Malaysia Smelting Corporation. No buy, no intention to buy, no buy call, no sell call. It's just teaching on how to use. Okay, it's a sharing. So right click, we can go to analysis chart. Okay, analysis chart. So I can full screen the whole thing. And then now I want to add in the moving average indicator that we have seen, where I just shared just now. So this is a candlestick. So below here is the candles. So how do I summon out? How do I call out all these things? You go to the arrow down here. Click, you see the arrow up and down? Okay, then I go through indicator. Add indicators. I click on it. Then I see moving average. I can also type out moving average. Simple moving average. There's two lines, so I call out two lines. Okay. Once I have it, so I need to go and change. I double click on it. I saw settings, close price, periods of 20. The line, the first line I want to make it blue. Apply. Okay. And the next line, I want to make it settings 40. I want to make it a red line. Apply. Then I save. So you can see, basically you can see already here, right? So let's assume, let's just take example from what we have screened through just now. If we are using, let's say, you have limited internet connection ke, or whatever ke, so you just want to use equity trading simulator, you can also use the same. So just for example, let's say we take stock, let's call MN Holding. Okay, you see a crossover, not a good example. We go to Pekka. Okay, this is a much obvious. You can see the crossover happening. So we can just go here and we can type out Pekka. Okay, you can see a crossover already happening here. Okay, so that's why I said the good thing about TradingView is you can set everything there. But then because TradingView you need to for the free version you can only put 2 or 3 indicators. But then for trading equity simulator, you can actually put in more indicators. For example, for those you like Bollinger Bands, okay, you like RSI, ADX, up to you. You can put a lot of indicators in. Okay. Yep. Okay. So I think there's 15 minutes left. Maybe I open to Q&A. Uh, is May I okay? Can you take the lead for the Q&A?
Yes, of course. So thank you so much, Mr. Johnny, for that wonderful session. So now we'll
No
be
problem.
moving forward to the Q&A session. So if you have any questions, please write them down in the Q&A box, not in the chat box, yeah, so that we don't miss out on anything, right? So the first question we have is from Steve Fu. Should PEG be more accurate than PE to value a stock? Many stocks like Max 7 stocks have high PE, but they have reasonable good PEG as their future earnings are mostly good.
Before that, oh yeah, Q&A. I saw a Q&A. Sorry. First question. May you're reading from?
From Steve
Steve.
Fu, should PEG be more accurate than PE?
Okay. Yeah. Normally for technology counters, the PE will be higher. So what I can suggest to you is you look at the PS. How much is the technology? How much is the range for the PE for the big counters? So the industry is important, and then the next is the average for 5 years. How much does it trade? How much is the PE across 5 years average? So if above the average, so meaning to say a bit overvalued, but if it's below, then consider a undervalued. That's how I can read. Steve,
Right.
hopefully I answer your question. Yep.
All right. So before I move to the next question, just to address Alicia Lau, just to let you guys know as well, the recording will be sent to you all latest by tomorrow. Okay, so you can review the session today. Right. So the next question is from Annie Chin. If a company's revenues grow, but if a company's revenue grows but net profit falls, how do you assess the fundamentals?
For this, when we're using through the screener, the PE ratio and also debt to equity ratio and also the ROE, I think it will mostly when the net profit fall, ROE might be falling also. If you look at the formula, okay, even though revenue grow, net profit fall, there must be something in between. So if you look at the fundamentals, if you look at the income statement, there's a lot of other elements. From the revenue, you need to minus a lot of selling, administration, tax, pre-tax profit, profit before tax, and then there are also some tax. I mean, there's a lot of elements inside there. So even though revenue grow but net profit fall, then there must be something wrong, something that which the company doesn't do good or doesn't manage properly, so the net profit is lesser. By right, it should be going in tandem. Revenue grow, net profit grow. So when we are using the ROE, so when the profit falls, ROE also fall. So most probably our screener will screen out. Okay, because we would like to prefer stocks with revenue grow, net profit grow. We do not want they cross over, revenue grow, net profit drop, or net profit is high, revenue is going down. We prefer both to go, which for me is an organic growth. Okay. Loss on Forex, you are correct. Yep.
All right. Next question. How would you use free cash flow versus net income to evaluate profitability?
This is a question from
Any change?
okay. How do I use free cash flow versus net income to evaluate for profitability? I would normally, for profitability, I will only use net income. For free cash flow, it's basically about how the company manage the cash flow, in which I didn't share in this session. For normally, so when I focus on cash flow, I will only focus on cash flow generated from operating activities. Okay, so if you want to go to the cash flow, that need I do not share in this session, but definitely we need to have some more sharing on the net cash flow. Oh, sorry, and also free cash flow. Yes, which yeah, I might not be able to answer you without sharing, I mean without in-depth knowledge and sharing on this.
Okay. Next question we have is from Hi Rizal Mana. Your advice for beginners doing the trade simulator or just jump straight to the real market?
Sorry again, the question is from
Hi Rizal Mana.
Hi
Yeah.
Rizam. Hi Harizam. My advice for beginner to doing the trade simulator or just jump straight. Of course, we jump straight into the trade simulator first. Do not jump first. Like for example, I always take this analogy when we are young, when we want to master in a topic, normally we will do some on homework first. What for those who are affordable for a rich family, you can go for tuition. So those maybe have some not so wealthy family, what I do is always I go for the bookstore and buy books and I start to read myself, and that's how I practice myself. So once you feel comfortable, once your trading simulator shows a good result, then you can dive straight into the market. But when whatever trade we make, no matter we win, we take profit, I mean we win or we lose money, we need to do self-reflection. Self-reflection here means that what do I do wrong? What do I do right? So when I'm making that decision at that moment, is there any emotional attached to me? So that's the most important, because I think for me as a human being, when I trade or when I click the buy or sell button, they are always emotion and they are always the sentiment of what if? What if I continue to buy? Well, I continue to hold. What if? What if? Okay, so whenever a successful trade, when you make, whether it's a loss making or a profit making, please do a self-reflection on that. That helps us as a human to grow and to perform better. Yep. Thanks for the question, Harizam.
Let's move on to the next question
Yep.
from Zulkarnain Lukman. How do you think on the indicators like MACD or RSI or stochastic?
Um how do I feel? I know all those indicators, tapi but most of the time I will try to make it simple. I do not want to complicate the whole chart analysis because the more indicators I put in, my chart will become messier and messier. So that's why I put it to simple. Normally, I only use Bollinger Band, moving average, and also volume. These are my major technical indicators, which I think in the examples that I showed just now, MA cross, candles above both lines, I think is enough. But if you want to further complement, you can enhance with technical analysis such as the candlestick pattern, whether it's a bullish harami ke, hammer ke, shooting star ke, together with the volume. So you can add those knowledge in. So I think it complement together with the technical analysis that I showed just now. I think that is enough. Thanks, Zulkarnain, for the question.
So next one from Chin Meng Lee. After using the screener or SMA and after executing a trade, if fulfilled all criteria, how often should we monitor to decide when to sell or when the SMA 20 goes below SMA?
Okay, thanks, Ching. Thanks for your question. So normally, okay, you say fulfill a criteria, I want to execute it. So let's say if I bought the counter, when should I monitor it, right? Okay, so if let's say you are trading Malaysia stocks, you're trading, use the same method for Malaysia stocks. I think Malaysia stocks, you can monitor once in every week. Once in every week. Okay, so if you're using, for example, I'm using the same method which I trade Australian stocks and also US stocks. I think for those, especially US stocks, you need to monitor, I think is every night, is every once per day. I mean, normally I wake up in the morning, so I just look at the performance. Because why? US stock is more they fluctuate a lot. For one day, one night, it can go up 30%, fall down 40%, 50%. But then in Malaysia, which is more stable, I will recommend, if you are free, best practice is every day. I mean, you just look at the chart, just a very quick 5 minutes. If you look at the chart, for example, the counter you buy, is there any news? First, you read, is there any news from the Bursa announcement? Second thing, you look at the chart, is there any crossover happening? If crossover happening, then you can decide whether you want to take profit or cut loss, or you want to further wait. If you want to wait, you need to, or you can wait until the candles fall below the line for you to make decision. Depends on your preference. Okay, but believe me, take profit is never wrong.
Okay, moving on. Next question from Annie Chin. Company reports strong earnings, but stock gap down. What could be the reason?
From Annie, right?
Yeah.
Which question? Sorry, May.
It's a company reports.
Okay, the company
strong
reports
earnings, yeah.
strong earnings, but stocks gap down. What could be the reason? This is always a question that nobody can ever answer. People always say that Mr. Market is reacting to itself. So for me, there is no answer for it, so we stay away. If the reason is, let's say, good reason supposed to go up, but then it goes the other way. So what I will do is I will stay away. Unless I read from the annual report, there are some future growth happening. But then the market react first to it, and I am sure that in the annual report is my first hand news. Then when it falls down, will be my chance to go in. So it all depends on situation. It all depends on situation and your comfort strategy. Maybe when it fall down, if you like the stock, if you already study, you think that the growth is there. When it fall down, you no need to go out all your bullets. You can divide your bullets to two bullets. Maybe you can shot one shot first. When it fall further down, another shot. Or when you first shot, when it fall down, when it go up, you can also average up. So it depends on your question. It depends on your strategy. But for me, if I saw that it's not in tandem with each other, I will stay away first, unless I am very comfortable of what they are doing. hopefully
right.
answer your question, Annie.
Okay, since we have a few more minutes, we can take 2 or 3 more questions. Okay.
Sure.
So another question from Annie Chin. What risk exists when fundamentals are strong but technicals are weak?
So let's say if we are using the screener that I have, so I think most probably it will help us to screen out those options. Good fundamentals but weak technical. So I don't think so it will appear in our screening. So that's why I say screener actually help us to screen out a lot of things. So if they screen out a lot of things, a lot of possibilities, I think the question that you mentioned just now, Annie, I think it will not come out as a result of our screening. Ah,
Right. So next question from Muhammad Ashraf. May I know on your advice, especially for this knowledge, a suggestion on books or theories since they are a student in investment analysis?
For this one, I think I can answer your question in my Facebook page because I think there are a few books in my mind which I do not remember the name of the title of the book. I only remember the cover page is black color, but I don't remember what's the title and the author. I will share the title and the author once I confirm on it. Thanks, Ashraf. Thanks for your question. Nice question.
Okay. Next question from CS Key. How do you evaluate an IPO stock, whether it is worthy to buy or not?
Okay. IPO stock. I did a study on that. I mean, for all the counters that listed. For me, if you are a Putra, go for it. And then, because the higher chances for you to have the Bumi lot is higher, you can get more lots and your chances are higher. So once you have that, from my analysis, normally between the first 10 minutes, you can take profit. Because normally when the IPO price, I mean at 9 o'clock, all the stock price will get up. And then some more, to support my statement, some more now the market is bullish. Okay, so whatever counter is listed, most probably will go within the first 10 minutes, it will go up more than 10%. So for me, if you are Putra and you have advantage on, take the advantage within the 10 minutes, set take profit at 10%. You can make it, you can have a quick money. So that would be my advice. So for those Putra like me, continue to apply. Every IPO you apply. And I think one day we have a chance to get more. I mean, I've still tried, but I still haven't managed to get a lot of lots and also, yeah. But you can leverage on a few platforms, Mumu, Weibo also, because they are nominee accounts. So I think for those you can get more. Okay. Yep, hope I answer the question. IPO stock, definitely go for it. First 10 minutes, 10%, you can have a quick money, you can earn quick profit.
All right. Let's have a last question from Annie Chin. How does dividend yield factor into long-term investment strategy?
Okay. When I share, this is a good question, Annie, but I think in this context that I'm sharing today, I didn't put into dividend. I mostly focus on growth stock. Okay, so dividend, if you want to go into dividend stock, I don't think so. You need the screener's help. I mean, the technical part. Okay, you just need fundamental screening on that for you to get comfortable. Unless you are using, I mean, after you screen out your dividend criteria, then you can use the technical chart just to see is it the right entry time. Because normally for dividend stock, it might be boring. You might not see a sudden surge in volume. So I think for dividend, best is once you screen out and you want to choose which one is the best, you look at the history of giving dividend and you choose the technical chart which you feel that safe. Safe here meaning to say maybe you can see the chart had been like sleeping for a long time, so it'll be a good chance for you to buy. Yeah,
Right. All right. That is all the time we have for Q&A. Thank you, everyone, for your questions. And thank you again, Mr. Johnny, for answering all the questions.
no problem.
So let's move on to the next part of the webinar.